Trump is inheriting a bias. If he wants to break some glass, he should do it early while he can still blame Biden. Because in a couple of years, he's going to own whatever happens. Think about how much more crypto-friendly and Bitcoin-friendly this administration is. And if it comes with a few things that we have to hold our nose on, well, that's the price we pay, right?
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In this video, Larry Lepard dives into critical topics like the 2025 financial reset, Bitcoin's role in volatile markets, Trump coin, and the looming threat of monetary collapse. Let's catch him to learn more.
So what I tried to do was kind of tell a story and make a more easily understandable narrative that anyone could relate to. You don't have to be a financial type. I mean, as an example, early on, I had people read it, have no financial background, and one guy said, "What's the Federal Reserve?" And so, okay, so I get a footnote explaining what the Federal Reserve is. Again, the money problem is a sophisticated problem that if you're just an average American, you don't think about it very much, except your prices are going up. And, the inflation, you experience that, front and center. And then you've got a bunch of politicians on the left who are all saying it's the greedy corporations that are the problem, when it's really not the greedy corporations, it's the Federal Reserve. And more importantly, it's the way the system is structured. I mean, the system is structured, as you said earlier, to require inflation. It's just math. Without inflation, we've got, debt. Our money system is based on debt. And so without a growing base of debt, you can't service the debt. So it's going to continually grow. And it's, that growth has started to compound. And anybody who plays around with compound numbers knows that they eventually go parabolic. And we're kind of in that stage now. As Parker would say, we're in the suddenly phase.
You think we're in suddenly?
Yeah, I think we are. I mean, it feels to me like we are. My most recent quarterly had two charts that show, the value. I mean, the 10-year bond used to be the base layer of collateral in the world. It was the securest thing in the world, and everyone relied upon it as a mechanism for pricing everything else. And in 10-year bond terms, gold, since 2020, which is when the last big print really started, gold's up 200%, and Bitcoin's up 2,000%. And so to me, these are both clear signs that we are in a sovereign debt crisis, full stop. And those kinds of things don't get easily solved. And, Powell thought he could do a Volcker and just raise rates and calm down the inflation, everything would be fine. But he's wrong, because when Volcker did that to GDP was 30 some odd percent. Now it's 120. So, he made the problem worse inadvertently, caused Silicon Valley Bank to fail. And, it's gonna just continue until we blow up again. And at that point in time, they will have to print more money. And eventually, I think we will either have extremely high inflation leading to some good political leadership and a monetary reset, or we'll have extremely high inflation leading to hyperinflation and the complete failure of the currency. And it's unclear which. It depends upon politics a lot. But like one of those two cases is going to happen in the next several years and then become acute before what I kind of consider I think this whole thing is going to get solved by 2030. Not 6 years away, but we're in it. And it's a fourth turning, and they typically take about that amount of time. So my view is we're gonna see this end game play out pretty quickly. And the book, the book is divided into two sections. The first part is the problem, how you're getting screwed, how they're screwing you, why they're screwing you, how the system is broken for the average American and really average world citizen. And then the second part of the book is the solution, which most people watching this podcast probably know it, but for those who don't, it's Bitcoin, from the base layer on up. And so I educate people as to what Bitcoin is, and I try to dispel, the rumors and concerns. I mean, there's some really, I think my wife made a very meaningful contribution. She doesn't know anything about monetary policy. She's a writer and artist and was an ad executive when she was working. And she read it and she had a lot of comments like, they're not going to understand this, why don't you clarify this? Why don't you clarify that? But she came up with one really great suggestion. She said, why don't you write a chapter and call it skepticism? And just talk about how, all throughout history, whenever something new has come along, there's been skepticism, whether it's the Luddites or the Red Flag Act or, Krugman with the fax machine or, there are 20 examples. I mean, people saying that, nobody would ever need a personal computer, et cetera, et cetera. And so I did that. And then I also did a lot of debunking of the difference between Bitcoin and crypto because, frankly, as we all know, Sam Bankman-Fried really did us a disservice. And the whole crypto industry, frankly, a lot of it, almost all of it, has done Bitcoin an enormous disservice because Bitcoin really is not crypto. It's a technological revolution. And crypto is a bunch of fraud in most cases. So, I've tried to separate those two. And then there's, at the back of the book, there's even a section called, objections and answers. I mean, the kind of thing you would do at the end of a case study where, well, this thing uses too much energy. No, here's a page that explains why it doesn't, or whatever. Just to, the standard objections are, we can't have deflation. That would mean the Great Depression. No, deflation is what we want. Deflation is a good thing. So,
Silk Road founder Ross Ulbricht, who had been serving a double life sentence without parole, has publicly expressed his gratitude to President Donald Trump after receiving a full pardon. This momentous event marked the first time Ulbricht had spoken publicly since his release from a maximum security prison in Arizona, where he had been incarcerated for over 11 years. In a heartfelt video shared on X on January 23, Ulbricht shared his overwhelming emotions, stating, "Last night, Donald Trump granted me a full pardon. I was doing life without parole, and I was locked up for more than 11 years. But he let me out. I'm a free man now. So let it be known that Donald Trump is a man of his word." Ulbricht described the pardon as an amazing blessing and expressed profound gratitude. He conveyed his relief and joy at having his life and future restored, emphasizing how transformative this moment was for him and his family. "Thank you so much, President Trump, for giving me this amazing blessing. I am so grateful to have my life back, to have my future back, to have this second chance," Ulbricht said with emotion, calling the experience a significant milestone in his life.
I've just tried to attack it from every single possible angle and get the average human to see that this is obvious and it's an incredible opportunity. One thing I kind of arrived at this in writing the book on my own that I thought was to me it was a big insight, was just the nature of Metcalfe's law and the nature of value creation in network businesses. And so I point out that when, the internet really changed the world in a big way. It was the first big, the microprocessor was a big revolution, PCs, fine, but it all led to the internet, which was the first revolution pre the Bitcoin revolution, which is the next one. And one of the things that's very interesting is that in the internet, there are businesses in the internet that in a 20-year time frame, from the time the internet really kind of became commercial around 2000 till present, 24-year time frame, have gone up by, Amazon, 218,000%. Google, 9,000%, Facebook, 3,000%, Microsoft, 4,000, there are network businesses that have increased thousands and thousands of percent from the day when they were introduced. And pre the internet, that just didn't happen. I mean, if you study, General Motors from 1915 to 1960, it didn't go up thousands of percent. It went up a lot in value, but not the kind, and by the way, that was over a 50-year period. Network, and by the way, it's also why I miss those businesses. I mean, I remember looking at Amazon and Facebook as possible investments back in the early days. I looked at the multiples and I was like, I can't pay that much for this. It just makes no sense. Because I was trained in the old, you got to look at the PE and you got to look at the cash flows. And I didn't understand the way that networks grow in value, as a square of the underlying number of users. I mean, basically Metcalfe's law. And that's a very powerful, different model for looking at investments. And it's why, you have to hold your nose and pay what you think is too much when you're investing in a network business, because if the network continues to grow, pretty soon it's not going to be too much anymore. And I think one of the biggest things I'm encountering right now, trying to get wealthy friends to buy Bitcoin, as they all know, I have a much lower basis and I've been buying it for a bunch of years. And like, well, how can I pay $100,000 for stuff you were buying at 400, 10,000, 15,000, 20,000? I'm getting robbed. And I'm like, no, did the people who were buying Microsoft in 1991 get robbed? Because if it truly is Saylor's model that it's going up forever, Laura, it doesn't matter where you buy it. You just got to buy it, right?
Yeah.
And so to me, we've got to get that across to the average American, because that price bias is really large in my experience.
MicroStrategy, the publicly traded firm famous for its massive Bitcoin holdings, has found itself entangled in tax complications stemming from the Biden administration's Corporate Alternative Minimum Tax, CMT. This regulation, introduced as part of the Inflation Reduction Act of 2022, imposes a 15% minimum tax on corporations with adjusted financial statement income, AFSI, exceeding $1 billion over a 3-year period. For MicroStrategy, which owns an astounding 461,000 BTC, this rule could lead to significant financial obligations unless the provisions are amended. The Wall Street Journal's Jonathan Weil suggests that without relief, MicroStrategy may be forced to liquidate a portion of its Bitcoin holdings to meet tax requirements. This prospect has sparked concerns about potential instability in the broader cryptocurrency market. Critics argue that taxing unrealized gains, wealth that exists solely on paper, is both economically harmful and ethically questionable. By targeting such gains, the CMT reflects an overreach of state power, threatening property rights and corporate autonomy. The situation highlights deeper issues about government authority and economic freedom. Should corporations like MicroStrategy be compelled to alter their strategies to satisfy these tax obligations? Or does this policy represent a violation of their rights to manage resources freely? The outcome of this debate could set a powerful precedent, shaping the future of taxation and its impact on emerging asset classes. BlackRock has taken a significant step toward modernizing its spot Bitcoin ETF, the iShares Bitcoin Trust, by filing for an update to allow in-kind redemptions. This change would enable large institutional investors, known as authorized participants, to directly redeem shares in Bitcoin rather than cash. This streamlined approach enhances efficiency by reducing reliance on market makers and avoiding the costs of converting Bitcoin into cash. It also allows participants to respond swiftly to market demand, ensuring smoother operations for the ETF. Currently, the U.S. Securities and Exchange Commission, SEC, only permits cash redemptions for spot Bitcoin ETF. However, Nasdaq's recent filing with the SEC proposes integrating in-kind transfers, aligning with how most ETF function. Although retail investors won't have access to this model, it represents a crucial evolution for institutional Bitcoin adoption. BlackRock's iShares Bitcoin Trust has already made waves, amassing $60 billion worth of Bitcoin within a year of launch, about 2.7% of the cryptocurrency's total circulating supply. BlackRock's rapid accumulation underscores its pivotal role in institutionalizing Bitcoin. CEO Larry Fink's ambitious predictions of Bitcoin reaching $700,000, driven by sovereign wealth fund interest, highlight the growing acceptance of Bitcoin as a mainstream asset amid significant shifts in global financial strategies. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.